Okay.
There
There
we
we go.
go. Awesome. And I do see that the record feature is going. So we are live and recording. So go ahead. Patrick, you ready for us to go ahead and get things on the ball?
Yeah, yeah. That'd be great. Let's do it. Thanks again.
Alrighty, sounds good. So, good afternoon, everyone. Creedmoor with the Bullish here, Bullish Bears here with a special guest, Patrick Zbauer of Infinity Futures. He's going to be showing off the AT Charts platform, the AT platform, and just everything that has to deal with Infinity Futures. We've had a lot of uproar lately about, hey, what's a good dedicated futures platform? Infinity Futures, out of all the platforms I've gone through, they show a really, really, really good, well-rounded platform and stellar customer service through there. Now, keep in mind that futures, that's something that's not for everybody. So you need to understand specific risk. He'll go through the disclaimers and things of that nature. But if you have any questions, please feel more than free to type them in the chat. Do the best of our ability to answer them. I'm going to let him go through all of this stuff through there, unless it's a really, really, really specific question that deals with exactly what we're speaking about. I will not interrupt him at the end of what he has to go through. Then we'll do some Q&A. We want to keep this as efficient as possible. So please, as always, remember, if you wouldn't say it at a funeral, don't say it here. And other than that, Patrick, welcome. Thank you for your time. And please go with it. Show us what you got.
All right. Thanks, Creedmoor. I appreciate that. Hey, Dan, how you doing? Appreciate the welcome. Thanks for the opportunity, Creedmoor. Really appreciate it. What I'll do, folks, is I'll go through a couple of slides. I mean, I don't want to spend a lot of time on slides. I know everyone here is tired of that, but there is a couple of bits of information in here that I think are particularly relevant to the futures trading community, especially those of you who might be trying to migrate from the equities or options community. A lot of our clients come from that side of things. So I'll maximize the slides here and go through a couple of these things. As I said, I'm not going to read them word for word, but we'll go through we'll go through a few of them. So again, my name is Patrick Zbauer. I'm going to read through some risk disclaimer stuff here in a second, and then I'm minimizing this other screen so I can see questions. So I will do my best to answer questions as we go through. Please feel free to ask anything. You'll see I'm pretty much an open book, and I'll tell you a little bit about myself as we get in here. So trading futures, options on futures involves substantial risk of loss, is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. And here's a new one that's sort of been added recently. The lower the margin, especially day trade margin, the higher the leverage and riskier the trade. Leverage can work for you as well as against you, as it magnifies gains as well as losses. Please be aware that margins can be changed without notice at any time based on market conditions. So that disclaimer, wow. You've all seen it before. You've seen it in the emails and websites and whatnot. It's mandatory, but it's also really important. Futures trading is not for everybody. That is a reality. There have been some new products that have come out recently that have made futures a little bit more accessible to people who are just trying to dip their toe in the water. We'll talk about those a little bit as well. But the general underlying principle here is that only fund a futures account with risk capital. That means money you can afford to lose without lengthening your retirement horizon or affecting your ability to maintain your lifestyle. I mean, everybody here knows that if you deposit money into an account that you can't mentally disconnect from, that your decision making is already doomed from the beginning. It's just all there is to it. And so that's especially true with futures. We are trading with leverage. There's a lot of volatility right now. Obviously, some of it's dissipated in the last 48 hours, but we all think it's coming back, at least I do. And you really want to have your head screwed on nice and tight, and just be very conscious of the fact that there's a risk capital curve and everybody's on a different end of it. And one of the nice parts about me being, for example, a registered, NFA member is that I can have personalized discussions with people based on their specific situation. That's part of me being licensed. So if you want to talk about it, whether, you think you're, very well suited, or you're not quite sure, you're brand new, you don't even know if this is worth the risk or the time, feel free to have that discussion. I mean, obviously we have an interest in you trading with us, but if we don't feel comfortable with where you're at, we will tell you. All right. And if we can direct you in a certain way that, maybe you're a customer, a year down the road or 2 years down the road, so be it. But it's better. That's best for everybody. A little bit of background on myself. My name is Patrick Zbauer. I've been with Infinity since 2004. I'm a branch manager in Austin, Texas. The company's headquartered in Chicago. I moved here from Illinois about 3 years ago. A lot of good reasons, in my opinion, to try to leave Illinois. And I found myself a home in west of Austin, Texas, so in the Hill Country area. I'll talk a little bit about my perspective and my belief system as we go here. But the reason I do want to mention, and I always mention my tenure at the firm, is that there are other people that work for Mpd in a similar position as me who've been here longer than me. There are a lot of other representatives in the office who have been here for a very long time, nearly as long as I have. And I like to mention that because this is a very tumultuous and high turnover business in the brokerage business, especially in the futures brokerage business. And there's not a lot of companies where you have contacts that have been working there for 5, 10, 15 years at the same firm. I'm 37 years old, I think, 37. I've been working for Mpd since I was 21 before I graduated college. I just never left. And it's a great company. It's a very stable company, great management, highly specialized. And, we'll talk, a little bit about how that can, impact your experience. But I do believe that's one of the best parts about our company. It's really hard to fit that into an email or a spreadsheet. Okay, so there's a bunch of people in here, I think, that are already clients. And so I really appreciate those of you who are already, customers of ours. I mean, I'm not, without going through every the table here, the general point of this slide is to show you where we fit on the spectrum of companies. So on the left, what I call a TV brokerage, that's companies that can afford ads on CNBC. Okay, everybody here trades with these companies. We all have accounts there. On the right-hand side, you've got a company where the platform, the order routing, the data, and the company holding the money are all different companies. So, you're not sure who they are. You don't really know. You never have to deal with them. But the reality is that the company that you pick up the phone and call when you have a problem, they actually don't have any interest or control over the technology that you use. Mpd is right in the middle of this because we offer what is called an FCM owned and operated platform. That means that the company holding the money owns and operates its own tech. So TradeStation does that. Thinkorswim or TD Ameritrade does that. They're big. They've got the resources to maintain and improve their own tech. Companies on the other side of the spectrum, some of which I'm sure are used here by some of y'all, they don't have their own product. You've got one company doing the front end, then you've got another one doing the data. Maybe they white label it and call it something else, and then there's an order routing company in there somewhere. And again, you're not really sure who it is. All you know is that if there's an issue, there's one of 3 or 4 companies that begin pointing their finger at each other instead of solving the issue. So I don't want to paint the picture that we are infallible with respect to technical issues. I mean, that is part of the electronic trading business. However, we have our own product and we have our own technology. So if there is some kind of issue, we already know it's our issue. And so you're not going to find this sort of like passing the buck attitude here. We are maintaining the technology at the clearing level. So that is an important distinction, and again, it's one that's really hard to fit into an email or a spreadsheet. All right, and we'll talk a little bit more about I'll show the platform, and we'll answer a bunch of questions and do some examples. It's great that the market's open. We still get a chance to do this. One of the things that has happened a lot in the last couple months is there has been an increase in interest in our company, and that is not unique to any particular volatility scenario. Usually when we get a spike in volatility once or twice a year, a bunch of other big name platforms have problems and they try to update their software on Sunday night and then nothing works on Monday and we get a whole bunch of new accounts that following week. Spikes in volatility do coincide with an overall interest in our business. This scenario is no different, except it's on a far more extreme level. We have had a lot of interest in the company over the last few months. I think it's been a combination of basically 3 things. Number 1, the overall volatility. Number 2, everyone's at home. And number 3, a lot of our major competitors having some severe reliability and margin, flexibility issues in the last 2 months. And a lot of those will start to dissipate as, the volume dies down. But the second it comes back, it's all going to happen all over again, I believe. And so we're encouraging people who have been kind of on the fence with working with us to start getting set up with us so that, we start to see the S&P tank again and volatility really picks up and everyone's logging in at the same time and everyone's trading at the same time. That's when we think we can set ourselves apart. And with respect to the option and stock trader, what we usually see happen when we get spikes in volatility is especially newer traders who don't understand, theta decay or vol crush, they really have a hard time getting, getting into the options world in a successful way. And so I think what happens is a few times people get into a couple of, option spreads or some outright option positions. They don't get the follow through they're looking for in day one or day two. And then the premium just gets sucked out of the option on a day like today or yesterday. And people are just like, well, on day three, they're right, but they still lose money on the trade because the premium is dissipated. So that kind of experience usually incentivizes someone to look at something that has an asset price that is not dictated by volatility or the number of days until expiration. So the versatility, the transparency of the futures market is generally attractive to people in the stock and option side after they've gone through that. Another thing that's happened a lot lately is the spreads, as we know, in many of these index option markets have gotten horribly wide. And even if you're paying a low transaction cost, if you're paying out the ear to get into a trade, just in terms of the spread, it's just as bad or worse. And lastly, this last comment about some of these other companies and the tech. I mean, again, technical things happen, and that's part of our business, and we always try to recover very quickly if there's ever any kind of disconnect issue or some kind of login problem. I mean, these things do happen, but the routine, issues that some of these companies with seemingly unlimited resources have, it's mind-boggling. And I think that it demonstrates our position further as far as where, why not work with a firm who actually specializes in this and whose technology is built for this. And so these are the three things we see, happen a lot when the volatility picks up. And then as far as, why we fit into the picture for people in possibly in this community is, number one, we have our ear to the ground. I mean, I'm always listening. I'm not in this room every day yet, but I really would like to get more involved, and I'm hoping the gentlemen here, are interested in that as we go forth. We've been stable, we pay attention, and we don't have to replace everything you've already got. So there's this sort of like idea that by opening up an account with another company that it's like, I got to learn a new charting program, and it's like staring off the edge of a cliff and all that. No, our depth of market platform is like, for anybody here who's an avid toss user, for example, or someone who uses Ninja or something like that, I mean, you're talking about a 15-minute learning curve, and you don't even have to use our charting. I mean, I'll show the charting, and our charting is free for most people because our threshold to keep it free is really, really low. So a lot of people elect to use it, even if they are not focused on it 100%. But you do not have to replace your whole setup. The resource usage of our depth of market platform, our DOME, is less than one tab of Google Chrome. No exaggeration. You can run it alongside anything. It's not going to affect your system at all. So the idea that you have to do this massive undertaking to get started with us is false. It's really, really easy to get started with us, and our software is way simpler than what most people are using. All right, now this is like hot topic number one. Okay, margin requirements. Do most people here have a general understanding of the difference between like day margin and overnight margin? Does anybody here not understand what the difference is between those two things, or who's responsible for dictating what those levels are? If you don't, please feel free to comment. Certainly if you do, I can go into greater detail. But if anybody here needs an explanation about margin requirements or how they're created, I can go into that. But the general idea, folks, is that there's two sets of margin requirements. Okay, so thanks guys for saying that. So day trade margins are dictated by the brokerage company. So day trade margin is what the broker wants you to have in the account to take a position on any particular market. Overnight margin, or what is often referred to as exchange minimum margin by the CME, is dictated by the exchange, and that is what you have to have in the account to hold a position through the close. So for example, the margin on the E-mini S&P, like right now, for an overnight position is something like $13,200. So if you want to hold a position through the close in the E-mini S&P, it's $13,000, it's $13,200, give or take, to have that you would be required to have in your account to not be on a margin call. So that number is dictated by the CME. It's not dictated by the broker. The broker might place a premium on it. They might say, you know what, we want 15K. But the CME's actual requirement is what most companies follow. That's what we follow. All right. Now, if you want to initiate a position after the reopen, like in the evening or early in the morning, we still offer a discounted margin for that trade, but we offer our most flexibility during the day. And by the day, we mean 7 a.m., as you can see here on the slide, to 4 p.m. Central. So anytime you want to day trade at our lowest margin requirement, you'd be doing it between 7 a.m. and 4 p.m. Central Time. So that means at 7 a.m., when you see $500 a contract, that means that we want you to have $500 per contract in your account in order to trade E-mini S&Ps. $50 on the micros, 1,000 on gold, copper, and most other markets, 2,000 on crude. We used to have crude at 1,000, but with all the craziness in crude, we did raise it. Now most other companies raised it to like 10,000, but we did raise it from 1,000 to 2,000 to take into account, the extreme volatility. So the bottom line is that we have a lot of flexibility when it comes to day trade margin. You do want to be careful about the use of day trade margin. So imagine if you had $10,000 in an account, $500 per contract on the E-mini S&P would mean that you could, in theory, trade 20 contracts. All right. Now, would you want to do that? I mean, is that a smart thing to do? Probably not. Okay, that is an extreme position size for a $10,000 account. But the general point of us keeping the margins low is that we understand capital efficiency. A lot of our customers don't need to keep a ton of money in their account to do what they want to do. And so we don't ask them to put up 10, 15 grand for a position we know they're risking like $300 on. Why would we do that? We've got the proper risk management protocol, technique, technology, personnel to manage the risk more effectively than that. What you'll generally find is that the big wirehouses, TD, TradeStation, some of these other places, they just don't have the ability to manage the risk properly. So they're just rather have you not trade. And one of the ways that they have you not trade is by doubling or tripling your margin requirement or doing away with the margin flexibility altogether. So the margin flexibility at Infinity, in my opinion, based on what I've seen since this crisis began, we've always been the most flexible, but we've been the most flexible throughout this crisis especially. And we intend to continue that flexibility even as volatility increases. So margins can change. They can change on a dime. That is the reality. But based on what I've seen, if they're changing here, they might be changing everywhere else 100 times worse. All right. So this is one of the strongest points, that we've maintained over the last couple of months. All right. Now, Wayne, if you put a trade on at 6 a.m. Eastern, do you need overnight margin? Okay. The answer is actually no. So I know. So this policy is shifting, and it's shifting back to additional flexibility, Creedmoor. So for example, we go to $1,000 now. So on weeknights, if you want to put a trade on at 6 p.m. Eastern time or 5 p.m. Central when the market opens on weeknights, we're now at $1,000 a contract on the ES. So at 6 a.m. Eastern time, which is 5 a.m. here in Chicago or Central time, then you're at $1,000 a contract, and then it drops down to 500 at 7 a.m. Central. So that was us lowering that requirement, Creedmoor and Wayne, was a reflection of the decreased volatility. So we reduced the overnight margins for trades that were initiated after the reopen in the evening to account for the fact that the volatility had ebbed a little bit. Now, if it goes back up and goes crazy again, and we're seeing limit up and limit down moves every night for a week straight, we may adjust that. But we have a lot of flexibility. So if you want to put a trade on a weeknight right now, after the reopen in the evening, it's $1,000 on the ES, and that drops down to 500 at 7. All clear?
Absolutely awesome. And thank you for that. See, peeps, that's one thing I like to make sure you guys always know. I'm not omniscient when it comes to this. And like I've always said, if I don't know, I'm going to find someone that knows. So thank you for that. Because I thought it was full. I thought it was full size set, to be dead honest. I really did. But hey, no, there we go. So we all learned something new today. Good stuff.
Yeah. So that is a policy that, as you said, it's shifting. I mean, it depends on the volatility, but again, we've always wanted to be the most flexible and also be smart. And so, that's always the goal. So Saftab, the requirement for, that's a good question, because it's kind of, wait a second, if it's 7 to 4 is a day margin, and then, after hours is only 1,000, where's the 13,000 come in? Okay, that's a really good question. The answer is only for the 1 hour period between 4 and 5 Central Time. So if you hold your position through 4 o'clock when the actual close is, then you got to be properly margined at the overnight requirement. But if you close your trade at 3:58 p.m. and then you open a new one at 5:01, you're on the reduced margin. It's only if you actually hold your position through that 4 o'clock close when the exchange actually goes to all the clearinghouses and says, okay, everybody inventory your positions, and then everyone's got to put the money up for the positions. That's basically what happens at 4. So if you avoid that process and you initiate a new position in the evening, then you're back to the lower margin requirement. So I want to say that you got to, just because the flexibility is there, don't discount the possibility of anomalous events occurring after hours. We've seen a bunch of them. I mean, remember the Swiss franc thing a few years ago, and then sometimes, the Bank of Japan does, a currency intervention at 7 p.m. and the yen rallies like 400 points in 30 seconds. You want to be aware that in a lower liquidity environment, the risks are higher. If you're going to trade an index in the evening, I mean, the E-mini S&P is arguably the best one because it's the most liquid of the 4 major indexes, the NASDAQ, the Russell, and the Dow being the other 3. But we have a lot of clients who like to trade off hours, so we want to make that available. But you still want to maintain a defensive posture and be aware. And I wouldn't recommend leaving anything unattended at the very least. Okay. All right.
Good stuff. Good stuff.
All right.
Any
Okay,
other relevant question, peeps?
Yeah.
All right.
Margin
Let's keep on going.
Okay. All right. So risk tools. So one of the great things about working with Mpd, these tools we have, they're just so unsexy. Talking to customers about how can we limit your position size and how can we limit how much money you can lose in a day. That doesn't make for a great email marketing campaign. Okay, like these are aspects though of our service that I feel are unique. And my goal as a representative who is commissioned, basically paid on commissions, is I want to extend the life of my customers' accounts. I want people to win. I want them to refer their friends. I need people to be in front of the screen. I need them to feel like this can be done. And one of the ways that I believe that is done is by extending the life of accounts. And one way to extend the life of accounts is to do everything that I can to prevent anomalous, like catastrophic style blowouts. Okay, that means someone's on the wrong side of something. Everyone here has probably done something like this before, where you get on the wrong side of something, it gets away from you, and then by 1 or 2 o'clock, I don't know about anybody here, but my decision making is completely shot. And so, if you've ever been in a position like this where you're stuck in something and you really damage the account after months and months of work, that is a really frustrating and very debilitating to the account and to you mentally. It takes a lot to fight back from that. Sometimes you got to save money and put it back in the account, or you got to trade at a much lower level and it's boring, whatever the situation is. So we have 2 functions that I think are very unique. And the goal of these things is to help prevent those sorts of occurrences. So one thing is what we call a contract limit or a position limit. So let's just say you put the 10 grand in the account we were talking about earlier, and you were to say to me, look, Patrick, I know you'd let me trade a 20 lot because you said $500 margin, but I just really don't feel comfortable trading anything more than 2 E-mini S&Ps at a time right now. So I'd like you to set me a limit of 2. We can actually limit that person to a 2 lot maximum on the E-mini S&P, even though by our standard, they have the margin to trade 20 at a time. It is an amazing function, because when we set someone's account up, we ask them to tell us what they want the limits to be. The people who haven't thought about it are often the ones that it becomes clear to us never had a plan going in the first place. The people who say to me, okay, Patrick, I've thought about this. I'm going to I want a 4 lot limit on the S&P, a 4 on the NASDAQ. I want 2 on crude and 2 on gold and 1 on silver. Okay, set that up for me. That person understands, because there's a good chance that person understands their limitations. They probably already made some mistakes. They know that having a modest position limit is probably good for them, because their game plan has said to them, Tom, you should never be trading more than 2 E-mini S&Ps at a time, no matter what. And so the only time this guy would ever be in a 2 lot or a higher than a 2 lot was if he was going on full tilt and trading outside his plan, or he accidentally double clicked the mouse, a bunch of times and ends up in an 8 lot. Okay, we all know how that works.
That actually
right? Or
happened just the other day. People saw it on live stream. My mouse double clicked,
right,
and I ended up in a
a
I
bigger
think it was a
position,
4 lot, a 2 lot, or a 4 lot, and I went, oh God, and
right,
boom, that was that
right.
$700 loss I took.
Right. Yeah. So I mean, that's it's a hard lesson, and the thing is that if you maintain, your ability to keep those position limits, that are in line with your plan, the likelihood of those sorts of events just is reduced. Period. I mean, the position limits are not infallible. I mean, again, it's technology, but they historically they do work very well, and we do have customers who actively maintain their appropriate limits. So it's a really great tool. It's something that we give people the chance to set when they get their account started. And then later on, they can always make changes. So it's not like if you need to increase your limits from 2 to 4, it's not like you have to file a form and then wait 48 hours like you did when you had to get approved for options or something in your stock trading account. This is an actively managed risk management desk where you will see changes made based on your request under normal circumstances within 2 to 3 minutes. I mean, we're talking about a really quick turnaround. So intraday, if you need to make adjustments or if you add money to the account and you want to scale things up right away or whatever, we can generally be responsive within a few minutes, sometimes even faster. Okay, Gus, going back to your question, you can trade the last hour of the market. So you can trade up until 4 o'clock Central Time. So if you want to trade futures, the E-mini S&P official close is 4 p.m. Central. You can trade all the way up until that time. So now if if you wait to the last second and you end up on margin call or something like that, that you want to avoid that. Okay. So my advice wouldn't be to wait till the very last second, but we do have customers who like to trade like post earnings. They want to trade the NASDAQ or something after Google's earnings come out or Apple or something. You can do that. You just want to be aware again of the lower liquidity environment, and don't wait till the very last second to get yourself flat because you don't want to get stuck in something. All right. Cam, we don't do any equity trading, so it's really just futures. So we do limit the number of contracts, but nothing with shares or ETNs or ETFs, et cetera. All right. Okay. And then the second thing is the daily risk limit. So the daily risk limit is a dollar amount where if you lose a certain amount of money inside of one day, our system is going to try to liquidate the trades and block the account. So again, not a particularly sexy topic, but again, one that has a lot to do with maintaining that defensive risk posture. So if you have, let's say you had $10,000 in the account and you were to say to me, okay, Patrick, you guys set my daily risk limit at 5,000. God, I would never lose $5,000 in a day. My personal daily risk limit every day is $500. Why don't you set my risk limit to 1,000? So 1,000 should never be hit because if this person is following his plan, then his personal risk limit is $500. If he's ever down 500, he should be done. But what if there's an event where, he forgets something or he's again losing control of the situation or whatever? When that customer hits negative 1,000, our system's going to try to liquidate the position at the market and block the account from doing any more trading that day. So if this person, hypothetical person, wants to trade again that day, he or she has to pick up the phone and say, hey, Patrick, can you unlock my account for $2,000 in risk? Most people don't want to do that. Okay, it's not because they're embarrassed. It's because who wants to do that? So it's also this is another effort on our part to extend the life of the account. Everyone has bad days. Stuff gets away from you. The difference is, are you going to let it destroy the account completely, or are you going to take a loss that in theory is recoverable without you having to add money? That is where the risk limit comes into play. So the primary function of this thing is to prevent a debit, prevent people from going negative in the account. Okay, that's not guaranteed. Limit moves and circumstances exist where that may be impossible, but that's ultimately what the goal is. The secondary function of this thing is to help people prevent a loss in the account that is anomalous. So it's again during the setup process. Once your account is approved and funded, we will give you a mechanism where you can communicate to us how you want this thing set, and if you ever want it changed, you would let us know, and again we can make changes within a couple of minutes notice. All right, so we'll skip that slide. Day-to-day man, this is not that important. I guess I always like to comment on a couple of things that I see from my side of things. Being on this side of the business for 16 years has yielded me a unique perspective in terms of human behavior. It's really unbelievable. And there are a few primary things that I really would like to touch on. I don't want to be the person who comes in here and is like, you just got to improve your discipline. That's it. That'll start to work for you. I mean, the buzzwords, I'm so sick of hearing these things. I'm sure you all are as well. It's just improve the discipline. Like, just follow the plan. All right. And, that's all you got to do. It's just, obviously it's not that easy. One thing I will say is that if there's one piece of advice I could give anybody here that is, in my opinion, something actionable that you could actually take with you is to try the number 4 or the point 4 on this thing is train yourself to look at open trade equity, the loss of open trade equity as not a loss. Okay. And what I mean by that is if you're in a trade and you're up, $150 or $200 or something in a NASDAQ or S&P trade, or whatever the situation is where you consider it to be, at this point it should be a win or at least a scratch. Okay. I find that my customers absolutely strangle their positions. They micromanage their way out of them. They never catch a runner because of it. You have to be able to catch a running trade from time to time in order to justify your process, your existence as a trader. It doesn't have to be every day or every week. Maybe it's once a month, maybe it's once a quarter, maybe, but that is necessary, in my opinion, to justify the scratch trades and pay for the losses and commissions and that kind of thing. And I think that one thing that I found some success in personally was the ability to not look at the loss of a positive open trade equity as a pain point. And if you get into a trade that starts to look good and you've given it enough room to breathe to the point where you are now sitting in something that might be up, $200 or $300, on a 1 or a 2 lot or something like that, taking one off or moving your stop to break even and leaving for a little while is a great thing to do. And you really only have one of 3 outcomes, likely outcomes. Okay. Outcome number 1, you're stopped out at break even and you're annoyed, especially if the market went back the other way without you. Okay. Outcome number 2, you're in a modest gain because the market hasn't done that much since you left. Or option number 3 is you're in a huge winner and the market ran, the S&P ran 35 points and you would have never caught it if you were watching it. And all that has to happen is option number 3 has to happen a couple of times, and it makes option 1 way less painful, which is, I got stopped out and I'm back to zero. I could have taken $250 off the table. I didn't do it. If you are able to catch a couple of runners like that, it's going to change your perception of open trade equity, and you're going to start to feel differently about giving it up. And you'll probably trade less. I mean, the people who do what I'm describing here generally trade less. But again, it's good in the long run. It's good for everybody. I always like to try to point that out because I think that it's something actionable that you can actually practice like tomorrow. When you're trading instead of just giving you some hyperbole. So, just my thought. That's something I always like to pass along. So let me just kind of rip through this here. We have a live market here, so I'm not going to go through the slides. But one thing I did mention earlier is the the DOM's resource usage. So this is from maybe a few weeks ago. This is the Mpd DOM, and this is the resource usage on the computer. So if you pull up your task manager and you look at your Thinkorswim, it's literally going to be like 3,600. I mean, it's going to be 100 times or 200 times this value, maybe more. This program is super, super lightweight, so you never have to feel like you're going to add too much weight to the system to use our DOM. Top of book data, we'll talk about that. Referrals and such. We'll come back to all this here in a little bit because we got a live market, so we can show the platform. So anyway, if I know I'm talking a little quickly, and if anybody has questions on any of these theories or these behavioral things, I'm obviously happy to discuss it because it's a huge part of of who we are, and our observations of our customers is what forms our belief system. Okay, so let me just demonstrate a little bit here what we're looking at. So our platform, folks, is basically 3 pieces. It's this thing up here we call the scoreboard. This is like a home screen. So this is not something you really trade from. It's mainly a place that you launch this depth of market window from, where you shut down the platform. There's a property section. where you might adjust some things. But the majority of the people who have this window up use it as a quote screen and also a place to launch the DOM or the DOM or the depth of market or the price ladder or whatever you want to call it. So you click on this little blue arrow, it brings it up, and this is how you get the window that that most of our customers trade with. All right, so these two items here are Windows based. So if you want to use the depth of market platform currently, you need to have Windows, whether that's a Windows machine or Parallels or VMware or Windows emulator. You have to have Windows to run this. This is basically our flagship program. It is what we have become known for over the years. So ideally, you have a Windows environment, but there's some good stuff happening, and I'll get to it in a second, where very soon you may not necessarily need this. But if you have a Windows machine like laying in the corner of your office collecting dust and you want to use our program, but you're normally a Mac guy or girl, then I would suggest dusting it off, just because, again, the platform doesn't require very much in terms of resources. All right. This thing over here on the left is what we call AT Charts. So AT Charts is basically a browser-based charting program. This is web-based, so it runs on any device. Keith and some other folks who are asking about that, I'm sure. You could use it anywhere. I use it on an iPhone 8 as well. You can trade from it. So it basically serves as our mobile solution. So we have the ability to satisfy a customer who likes to trade off the charts, or who likes to be able to monitor their positions or their P&L from their phone or an iPad or something like that. So this, again, on the right side, these two things, these are, oops, I just lost that. These two things are PC based. So you need a PC to run it. The charts are web based. Very, very soon, we will have a web based DOM. Probably within, I saw a working beta of it maybe 3 weeks ago. So there will be a time here in the very, very near future where you will see a DOM like this, except it'll be launchable from inside the chart window, and you'll be able to run as many DOMs as you want on any device. So for the Mac users out there who are really diehard and they don't want anything to do with Windows, that is something that is going to be available really soon. All right. Bullfighter asks, can Infinity be used in different countries outside of the USA? Yeah, I mean, we have, I would say, if I had to estimate, I would say about 60% of our customers are in the US Bullfighter. The other 40% are everywhere else. There are some locales we can't open accounts from, but we have customers in Australia, we have a large contingent of customers in Singapore. We have a large contingent of customers in Asia and all over Europe as well. A lot of business in the UK, many of which come from like a spread betting or CFD background. So we can work with people all over the world, and we're used to working with people everywhere.
Patrick, if I may inject on that as well real quick. So for the folks in Asia as well, I did notice something on YouTube. They actually have a specific section in Mandarin and Cantonese, if I remember correct. So if there is a little bit of a language barrier on there, they've actually got help videos on their YouTube in those languages. So make sure you check that out as well. They have a really good YouTube series.
Right. Thank you. Thanks, Creedmoor. And we also have a representative in our office who speaks Mandarin as well. So if it's if somebody needs that, that's definitely there as well. And while I'm on that topic, I'm going to put my my email address in the chat box here. So I have a short version of my email. It's just my initials, pz@infinityfutures.com. One thing I'll mention is that if you are potentially interested in checking things out a little bit further, or if you want to try the platform in a real-time environment with live data without having to open the account right away or something, come to me directly. If you go to the website or you go to the chat box on the site, you're probably going to get round robined off, to someone else in our office, which is not the end of the world, but I'm trying to corral everybody in this group. I want to start to create content specifically for this group. So it would be best if you would, contact me direct, and I'll get you squared away. Or at the very least, if you're already, in our system and talking with someone, just mention that you came from Bullish Bear, so we can keep a record of it. That really would be useful. So there's my email. It's just pz@infinityfutures.com. And if you want to give things a spin, just let me know. Okay. Okay. So I want to show a couple of the kind of the fun things you can do with the platform. I'll describe very briefly what I've got on the chart as well. I mean, I've got, again, my own opinions based on, the information I've picked up over the years and what I've learned. I mean, I've been in, lots of different educational rooms, and I've learned a lot from my own clients. I've learned an amazing amount from my own clients. I do like to keep things relatively simple. I find myself to be a, relatively bad trend follower. So I really like reversion to the mean or counter trend trading, which has gotten me in trouble at times. But I use this basic setup, which is called an Mpd indicator, which basically is kind of like a giant Bollinger Band. So the Mpd lines, which are these lines up here, are basically a derivative of the VWAP. The VWAP is that white line in the middle. And then this red line down here represents 1/2 of the day's range divided by 2, and then it's subtracted from the white line. So this is the half the day's range divided by 2 subtracted from the white line. And then this red line up here is half the day's range divided by 2 added to the white line. So it creates this kind of big Bollinger Band effect. And then the blue lines are midway points between the VWAP and the Mpd line. So the Mpd strategy is basically based around the concept of trading around the edges, which I'm sure many of you have heard that term. Trading around the edges is the idea that you only participate when the market makes an extreme move, because there's a good chance that by the time it does, the market has chewed up a lot of retail money and it's going to turn around. And so, it's not that quite simple or quite that simple. Obviously, the market doesn't just bounce off these things all day. Sometimes it absolutely tears through them, especially as we've seen, days like yesterday are great examples. If you're a counter trend trader and you were short coming into the morning yesterday, I mean, you're toast, right? So you have to have context. It's not just about the market bouncing off these lines, but if you find that the trading community and everybody in your room and your colleagues is like, oh man, it's so choppy, like I can't trade this chop, pull up the Mpd lines, because that's like the perfect time to be looking at a reversion to the mean style strategy like the Mpd lines. And a lot of times what you'll see on those days when everybody's complaining is the market is just kind of bouncing in between these levels. And the blue line could be used for the more aggressive types if you don't want to wait until the market starts to break further. Some people use the middle line. Some people like to wait until the market, reaches the upper extreme areas or the lower extreme areas. And in terms of context, like what makes for a good counter trend trade? I mean, what I think makes for a good counter trend trade is lack of conviction. Mixed up indexes where like the S&P is up, the Russell's down, the Nasdaq's flat, the Dow is up. They're not all just ripping through the upper bands or the lower bands at the same time. Some people here who have probably heard this from other sources as well, the yen, big flight to quality instrument. Sometimes it has an inverse correlation to the stock market. If the market's ripping lower and the yen is making a new high, like at the same time, that's often a market that, is showing real capital outflow out of stocks and into the yen. That would be a market that you'd be really hesitant to buy unless you were really doing small size. So, there is context. It's not just like, buying it if it falls and selling if it rallies. Day like today was kind of interesting because the range had already been widely established by the time I got in. So to me, this is a really good kind of Mpd style day because you've got this big range in the morning, the market fell off, and by the time you're in looking at things, you've already got this nice wide range, and then there was just a bunch of indecision after that. And so that is to me a market that for a person who likes choppy trading is actually good. So I personally would love to be a great trend follower. I've found that I'm not a very good trend follower, so I've had to gravitate towards strategies that keep me out of the participation for a lot of the time, which requires a lot of sitting around and waiting. But that's that's what I found serves best for my my very much acknowledged weaknesses. So this is just an indicator that is part of our regular studies. This is a volume profile. There's a couple lines on here that represent the previous day's open, high, low, close today, or previous day's high and low, today's high and low. But beyond that, there's not much to it. But it's a really easy to use package. These charts are free. If you do 10 round trips in a 30-day period, they're dummy proof. I mean, anybody can use these things. The studies are all right in here. There's drawing tools. There's a bunch of time frames, tick charts, range bars. There's a whole bunch of different, you can save views. It may not replace everything that you're already doing, but if you have a day like where we're seeing massive volume and toss is, 3 to 5 minutes behind, like it was a couple of days when things were really cranking, you could use our program. And it's probably not going to cost you anything because we waive our $12 fee, which is what we charge for the charts, if you do 10 round trips every 30 days. So if you buy one, sell one 10 times in a 30-day period, then we waive the fee we would otherwise charge for the charting, which is $12 but it is optional altogether. So if you don't want to be on the hook for it at all, you're just not interested at all, then you can opt out of it entirely, in which case, there is no volume requirement. So the charting is really solid. It's easy to use. It runs in a browser. It runs on any device. It can easily, fit into your world a little bit. I'm sure there's something you can, you'll find about it that you like, but you also can operate with the idea that we're not going to cram it down your throat either. And if you just want to, use something else and you just rather execute with us, that's totally fine. Okay, 30 days including closed market days. Just want to be sure. Yeah, it's a 30. It's the demo. Yes. The billing cycle is 30 days, 30 calendar days. So if you opt in to the charting, let's say hypothetically today, May 19th, then sometime in June, like June 18th, depending on how many days there are in the month, you would see either a bill or it would just start another 30-day period. All right, bullfighter commissions on micros. I mean, we're not doing a ton of business in the micros, bullfighter. I mean, typically we start off around $1 a side on the micros. I know it sounds, more expensive than what you're used to, but we also, don't go to full margin every time there's a little volatility. And we also, the way that we've seen the people use the micro contracts has been not as a substitute for the regular E-minis, for which we normally charge $1.25 a side, by the way. So $1.25 in, $1.25 out. We've seen people spend a lot less in aggregate fees, even with a higher per unit cost, because the people who are trading these things properly are using them for their scalability, not as just a smaller version of the E-mini S&P. So I don't want to tell anyone what to do, but my opinion is that if you're using the micros as a practice environment for trading the regular E-mini, that to me is not a productive exercise. I'm sorry if it goes against what anybody else, might believe, but the difference in trading one or two micros versus trading an E-mini S&P, the behavioral differences will be too far apart to justify the use of them as a practice tool. What they are good for, and again, my opinion, is someone who wants to scale into, let's say, a 25 lot micro position over the course of a 6-hour period. They want to pick up a whole bunch of micros and they're going to scale into them and maybe a little bit heavier on the bottom end of their expected range. And they're going to buy 2, 2, 2, and then they're going to buy 6 here and 10 here. So if they get them all, they're going to be long maybe 20 micros from near the bottom end of their acceptable range. And that's not a horrible position for a reversion to the mean style trader to be in. And the person who trades that way, even with a higher per unit cost on the micro contracts, is probably going to pay us in aggregate far less in fees, and will probably have far less debilitating, $100, $200, $300 stop outs throughout the day. So the micro contracts are good. I think there's a place for them among the retail trading community. But I think that there is a little bit of a misnomer, in my opinion, as far as like whether or not they make a good stepping stone into the regular E-mini. I don't think they do. I think that it's just as big of a jump from going from demo to live as it is from going one micro to an E-mini S&P. But if you look at the micros and use them for their scalability, as their own instrument, I think that there's something there. Look at the market here. What's going on? All right. So look, while this is moving, let me show you just a couple of neat things you can do. I mean, like I said, the platform is really, really lightweight. I'm going to show you this multi-bracket feature. So let's just say I was doing a 3-lot trade in the NASDAQ. So I would not put a target of 4 ticks in the NQ, but for the sake of this example, it's going to be a 3-lot trade. So exits of 1, 1, and 1. Target 4, target 8, so 4 ticks, 8 ticks, and 20 ticks. And I'm just gonna, let's just buy 3 at the market and see what happens. So I'm just gonna buy 3 here. All right, so I get filled. Okay, I already got target 1. So that was so fast I couldn't even explain it. So target 1 already got filled, which means I'm only long 2. And because of the break even being set to -4, the stop went to break even -4 ticks automatically. So we bought 3, we took 1 off at +4 ticks. The stop automatically moved to break even -4 ticks because of this feature right here, right? So that is, that's an example of like a quick scalp style trade. I mean, you have to really be on the ball to trade the NQ this way. But the point of this is that anybody can set up this sort of automatic scale out with really very, very little effort. And if you want to modify the orders, you just move them around like this. Okay, we just got stopped out, took the rest off, and you can see the position goes back to 0. So let me do that again. Let's see if we get a little slower market. So I'm just going to buy 3 at the market. Okay, we're long 3. We can scale like this. Okay, so the target's 222. Now let's say I want to modify these down like this. I have the ability to do it. Okay, I was trying to modify something as it was getting filled, so we'll get an error there. That's okay. I can hit cancel all. I'm long 4 contracts. I could do, let's say, stop, 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 stop. We can see the orders on the chart and listed right here. Okay, target, 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 target. The program is pretty easy to maneuver under fast market conditions. So again, this has a lot to do with the way it's designed. I know it doesn't look like it was designed by Apple, but it's super fast and super reliable, and that's typically what our what our customers care about. All right. So I'm just going to flatten the position. Let's just say we want to cut it loose. I just push flatten, cancel everything. We close out the position, eat the loss, open trade values back to 0. All right. Let me pull up another market here as well. Like here's the E-mini S&P. Okay, obviously a lot more depth to that order book. Something very simple. Let's say we just want to do a profit target of 12 or let's say 14 ticks. Stop loss of 10, check auto. I'll just buy one. Let's go short this time. So I'm just going to sell one so you can see the difference between a short and a long. Notice that there's a red -1 here instead of this blue positive one we saw before. This indicates a short position. Here's our target. Here's our stop. The P&L is going to be tracking down here. It's super, super simple. So it's just a very, very lightweight and easy program to use. It doesn't have much of a learning curve, and anybody here, I'm sure, could get their head wrapped around it pretty quickly. Christos, there is a Renko capability in the chart. It's not too configurable yet. We are going to expand upon it, but you can click on the settings button and put in a Renko bar. It'll auto select it like this the first time that you pick it, but you don't have to stick with that setting. I myself do not typically use Renko charts, but that capability does exist.
If I can interject on that. So Christos, if you go to the Bullish Bears YouTube, you'll see the Renko option on there. I actually did a video on both the Thinkorswim and the Renko selection for AT. So you can go on there and find all the info on it and get set up. You'll get all my settings in there. So good stuff.
Right on. Yeah. So that's it. There's been some requests to add things like Flex Renko, Unirenko charts, and that kind of thing. That's coming down the pipeline too. I can't say that exactly when that will happen because there's a couple of other big projects that they're working on, like the web-based dome and some other things that will come that will probably get done first. But yeah, that's it's a pretty common request for sure. All right. Wayne, on the ES Mini, I have 194 in and out at Ninja Competitive. Well, the exchange and NFA fees on the ES Mini are. Oh, you mean the micro? That's possible. Sure. Yeah, that's not a bad setup. It's something we could work with too. But yeah, I thought you were talking about the regular E-mini S&P. The exchange and NFA fees alone are 250. Yeah, the exchange and NFA fees alone though on the E-mini S&P are $2.50. So it's actually not possible to pay 194. Net of everything.
Yep. Yeah, peeps, that's one thing to keep in mind with it too. A lot of people forget that you have the NFA fees on that. And that's something I've noticed through a lot of platforms is they'll say, oh, I have XYZ commission, but they'll never include the NFA fees. I go, wait a second here. And then you add up the whole trip and it's expensive.
I know it's the best example I can give of that is TD, because TD charges what they call $225 per contract. And so when a customer who doesn't know what that means necessarily, if I were to pick up the phone and say, hey, Diane, what are you paying at TD Ameritrade? And she's like, well, $225. I'm like, well, you're actually paying $7 or close to it because they mean $225 aside, plus exchange and NFA fees, which is another $250. So you're at $4.50 plus another $250, $2.50. And all of a sudden, that person who thought they were paying $225 is actually paying $7. So, that's just, something to be aware of. We try to give people all-in rates whenever we can because it's kind of like, when you get your cell phone bill and, they tell you it's $100, but there's like $40 in government surcharges and fees added that they didn't quote you. It's, that's what I mean. Okay, yeah, 194 each side. So that's more like closer to $4 for the round trip. Yeah, that's not a bad rate. I mean, it's not a bad rate. We're in the ballpark, but again, we don't require the leasing of the software. We don't have third-party everything. I mean, we believe there is value in having FCM owned and operated tech, and you just can't get it there. I mean, you've got one company, Dorman or Phillip Capital, and then you got another one, Continuum, which is really a white label of CQG, and then you got Ninja doing the front end. I mean, there's a lot of pieces to that, and we've been down that road. In fact, many years ago, long before Ninja became a broker, we used to sell it. I mean, we had Ninja Trader and Strategy Runner and all these other programs at Infinity. This is many, many, many years ago, and we used to run into issues sometimes where one company has an issue and we don't really know whose problem it is, but all we know is we got a customer on hold who's really mad and there's just nothing we could ever do about it. Couldn't do anything about it because it wasn't our stuff. I mean, the guy at Ninja, when you pick up the phone and call there, he can't control CQG or Continuum. It's not his product. So that's one of the things that that might have set us apart is the presence of FCM owned and operated tech. They're on the simple bracket. See that S&P trade has closed itself out, so we made back some of our hypothetical NASDAQ loss, okay, by being short the E-mini S&P. It took the position off, took the trade off, canceled the orders. There's an open order book up here where you can just double check to make sure that you don't have anything hanging out there. You can also see a summary of the orders down here where it says no open orders on the chart. So it's it's a really neat setup, and again, really really easy for most people to pick up. Right, Wayne. So you have to buy the platform, right, to get maybe a better deal. We don't have any upfront costs, for the software. We're like you have to buy a license or anything either. Go ahead,
Now,
Creedmoor.
Patrick, I think one thing that is really great about the AT platform, which I haven't seen anything else, I probably missed it if they did have it, but I actually like the breakout bars for that. So if peeps don't have, and let's say you're in a choppy sideways market through there, and you're like, well, if it does go above this or below this, I want to get in. You can actually set that up. And that I really like that for one of those coin flip moments, or you're just a little bit biased one way. So I think that's a really cool thing.
Yeah, that's cool. That's my boss, Jim. He does a lot of our webinars. He really likes that feature as well. So basically, I just enabled this thing called the breakout bracket. So the market, look at this market. What's going on here? Look at that. Something.
I blame Al. Let's see what happened.
This sounds like this seems like vaccine news to me, but we'll see. So let's say we go to properties. We have this thing called breakout brackets. So I could say buy offset of 10, sell offset of 10. And so what it basically means is if I want to put a breakout bracket 10 ticks above and below the market like this, so now I'm working a buy order up here with one click, and I'm working a sell order down here. Okay, we can see those on our open order window. The idea is that we place the bracket with one click, and then when one of these gets touched, the other one will cancel, and then this bracket will kick in. So if that buy order up there gets filled, okay, which it just did, now we have an order at 29.42, and if we scroll up, we should have another one at 29.48. So essentially, we're long from up here, which was a terrible entry. Now we're stopped out already, and we have to cancel the remaining portion. But the breakout bracket is basically for people who are looking at like a sideways market, and they just want to see if the market busts out of the range, and they don't want to necessarily have to bracket that trade once it gets filled. So. It's a neat feature. It's not one I usually use on my own, but I like to do a lot more manually. But it is a cool idea. And we also are going to have more trading functionality on the charting as well. You can trade directly off the chart like this. I could put an order in on the chart with a stop loss and a target like this. So if I want to put a target in, let's say up here, and a stop down here, and just push buy, we put that order in. So on the chart, we can see the order. Okay, this is on the NASDAQ. Okay, we could scroll down and see it. So we can see the order at 93.50 right here. All right, that represents this green flag. And then these red flags represent where the bracket will go once we get a fill. So we just got filled, right? We just got filled on it. And we can now see the target and the stop loss. So the target's here at 96.30 or 93.68. The stop is down here. If we scroll down, we can see it as well, 93.42. So that trade was placed directly off the chart, but the dome, is capturing the action as well. So it's a really neat integration between a web-based and a PC-based product, and it also shows that you don't necessarily even need the dome. If you're a Mac user, or if you like to trade on the go, or you want to trade mostly on your iPad or something, you can do everything right on the chart as well. You'll notice the chart also has flatten and cancel options, and if I want to say, just flatten me out, you can hit flatten NQ. You can also flatten all your positions with one click. You can see a record of all your trades. You can see the trades on the chart if you want to. It's pretty nimble. So But that kind of covers what I wanted to talk about. I mean, I find that the hottest topics are typically margins, the platform reliability issues that we've seen out there. Infinity's a very stable outfit, and for anybody who's looking to, expand a little bit more into futures, we have, a lot of information to provide. And you're welcome to email me. I'll put my email address in here one more time, where if you want to contact me or try the software out, you're welcome to reach out, and I'll gladly set you up. The demo has got live data, it's got charting, it's got the dome, it's good for 30 days, doesn't have any obligation in terms of like paying or having to open the account first or anything like that.
So peeps, if you got any questions or anything like that, now's the time to ask it. And one thing I'd like to really point out is on the demo aspect of it. So you're watching our DOMs and stuff now, and you can see up there of how quick it's moving. And we just had this massive dump in the market, and that DOM didn't even flinch. It didn't flinch a second right through there. Now, if you took a second to look at the Thinkorswim, both the AT and the active trader and the just even the simple time and sales, that thing just stuttered horribly. So it's definitely interesting through there. Now, so Sandra, does the demo app run on Mac? So explain that before. You can run the web version of it, but you need to have darn it, train of thought, PC emulator on there. So you will have to make sure that's on there, but they are looking into that in the very near future. Patrick, question for you on this is, besides the new DOM setup to the main web-based chart, what do you see in the let's say the next 6-month time frame? What would you say is the second biggest thing coming to the Infinity family through there?
So I think it'll probably be the ability to run multiple charts inside one browser tab instead of just one. So right now you can have as many of these tabs as you want. Like if I want to duplicate this NASDAQ chart and make it an S&P chart, I can do that, but it's basically a separate window, and it can be arranged anywhere I want, and all my views are saved, and I can easily manipulate it. But we would like people to be able to look at more than one chart inside one screen. So that's probably in the near term. We're going to produce a lot more. We're going to make it a lot easier for some third parties to write and code into the program as well. So we basically have a scripting language. It's not visible to the public yet, but it's basically a web-based. I would say, if I had, from the feedback I've gotten from a couple people so far, it's easier than ThinkScript, but it's still some kind of derivative of JavaScript. So people are going to be able to write their own scripts and apply them in real time to the charting. That's probably something that's coming soon. I'd say the biggest thing that we're looking for is the ability to have multiple charts inside one window. So we'll see if that comes to fruition. The developers, they don't give salespeople or support people like me deadlines anymore, because then we hold them to it, and it starts a fight. But I know a lot of that is in the work. So it's probably we're probably going to do the focus on the web-based dome. We'll get that out. We're going to continue to improve the charting. We're going to make it more mobile, more compatible, easier to use for people on mobile devices or on Mac, Apple products, things like that, Apple or Android products, and just kind of see where it takes us. I mean, the infrastructure is so unbelievably solid. There's nobody at my company that I know of right now that is not that has been more bullish about the firm at any other time than we are right now. I mean, it's just it's been invigorating to see the infrastructure hold up the way it has under the circumstances we've seen. It's very much what you would hope it would do. And now we know a lot of other companies have just struggled immensely over the last few months. I mean, there's some of the companies with the margin requirements and the reliability of the software. Someone here mentioned Tradeovate. We have we do a lot of crude oil business, and Tradeovate was at $22,000 a contract on crude oil for a while. They might still be. So I mean, that's an example of a company where they don't really dictate the rules. It's really the clearing firm that does. And so here, having again FCM owned and operated program really makes a big difference and gives us a lot more flexibility.
Good stuff altogether. All righty, peeps. Are there any final questions from anyone? I'll give you 30 seconds to get your type in right there, just to make sure, because Patrick is a very busy man through there. Yes, Cam, you can trade gas, all of that. They have everything available. The way you set that up is when you log on and you get your account set up and everything. You actually email their support team and you tell them, hey, add XYZ ABC 123 to my book. And you'll be able to do that. And you do that at the same time you set up your limits. Me personally, on some of those, I have, I think it's 5 on ES, 5 on NQ, and then on the micros, I think I have 10, 10, and 10, something like that. And you just said it. And the support team, actually, it really surprised me when I first saw the video. I was like, I understand the support team's fast. I didn't think it was that fast. No, those guys are fast. I mean, they are really, really, really fast. It honestly, it surprised me. And I don't know if you guys are whipping them or what, but man, you guys have a strong team. I cannot deny that.
Well, I mean, the thing is that every single person who calls us or contacts us, there's a good chance that it's an urgent thing. I mean, we have grown used to dealing with people who are in a jam. I mean, why else do you call us or email us in a hurry? I mean, it's because there's something that needs to be done. So our help desk is staffed from Sunday evening until Friday's close. Everybody here, we talk a little quickly because we're used to, getting things done fast, but we understand that when people contact us, there is a good chance it's of an urgent nature. It's not like our customers are trading, 25 shares of SPY. I mean, these are futures contracts. And so we want to give, them and the market and the risk the respect it deserves. And a lot of that is reflected in, getting things done, as quickly as possible. So, and still at a high level of quality. So yeah, I appreciate you saying that, because those guys, they're on top of it for sure. Yeah, it's great.
Oh, yeah.
It's a great desk.
Alrighty, so
Awesome.
I don't see any other questions through here. So I have one final question for you, Patrick. You've been on both sides of the business here. So who makes the better trader, the the patient trader or the reactive trader?
Oh, I'm definitely in the patient category with that. I mean, that is the whole MPD line thing is about waiting for the market to get to the lines. I mean, some people are wired in a way that makes them very effective scalpers, where they're looking at information and the information changes and they are able to react in an efficient manner and make a good decision. I have found that most people are not wired that way, and I get really elevated internally when I start to look at trading strategies that require that kind of focus, and it makes my decision making really, really bad. So I'm man enough to admit it. I mean, there's a huge ego problem, in the trading community. I think most people who are able to let that go and just look at inward a little bit will probably see the same thing. But I believe that trading strategies that allow people to reduce the amount of the elevation, the physiological response to risk, to reduce that impact is really what is important. So that's why I gravitate towards strategies that that require me to wait around, because if I don't, then I'm in trouble. So at least that's me. So.
That's awesome, man. Thank you. Alrighty, so everyone, since there are no further questions through here, Patrick, thank you for everything. We look forward to doing this again and a continued relationship between the communities. But guys, the number one thing, this is about you. So please, Patrick put his email in there twice. And if you've got any questions, you can always email us, bbteam@bullishbears.com. Please, the worst thing you got to lose is a little bit of time. Hit him up in the email. Check out the demo platform. If you don't like it, then you don't like it. It is what it is. But we always want to give you guys the opportunity to the best tools out there. So if you got any questions, reach out to Patrick there. Patrick, you got any final things to say?
No, I have to read the risk disclaimer one more time. Do you mind?
Oh yeah, no, yeah, go for it. Do it.
All right, I appreciate it. Thanks again, folks. I really do appreciate the time. It means a lot to be able to speak in front of you. And again, if you ever want to have a conversation about risk or whether this is appropriate or how to transition from other markets, bring it to me, and I'll be happy to talk with you. So thanks again, everybody. All right, folks, trading futures options on futures involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. May lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Lower margin especially day trade margin. The higher the leverage and riskier the trade, leverage can work for you as well as against you as it magnifies gains as well as losses. Please be aware that margins can be changed without notice at any time based on market conditions. All right, folks. Thank you so much. Thanks, Creedmoor. Thanks, everybody. Really appreciate your time and the opportunity. Hope to do it again soon. Thank you.
Awesome, awesome. Hey, Patrick, if you wouldn't mind hitting the little record button up there, that'll end the recording. And peeps, that is everything that we've got. So